Welcome to Caching Waves. This is an Elliott Wave update for EGLD. It's been a while since we've covered this one. Just wanted to go over it. We were covering it back here when we were expecting this to be a diagonal and we get a move to the downside. That was our buy zone where we wanted to see support between 35 and 48. We just took through the high end of that. Best way I had this counted was as an ABC with a diagonal. Very complex structures, but it appears pretty bullish at the moment. We didn't get much of a retracement, so these are all good signs that we are bullish. Off that low, however, we've had nothing but chop. The bullish scenario I have set up here is that we're making another diagonal from one lesser degree than this previous one, so a 1-2 in the third wave. And the way that's currently mapping out is ABCs. An ABC, that's wave 1, our wave 2. This has to be WXYs, ABC, ABC. Remember, in diagonals, we can get single, double, or triple zigzags. Third wave targets would be around 80 to 84. If this one pans out, look for our fourth wave and look for our fifth up around the 1.618, which is at 90.45. I'm not currently in this. I would wait for the retrace here to go long. But I want to see this pattern fill out first before I get involved. There are scalps here, but I'm not interested myself personally. How that would look is we have an ABC here. You would target the 1-to-1 extension of this next 5-wave move here as an ABC. Target the 1-to-1. You can see that closely lines up to our 1.236 and 382. Might get a little bit of an extension, but it's too much chop for me to trade confidently, which is why I want to see this wave fill out first before I get interested in a buy, because I don't think it's going to get away from me either way. I'll just get a better entry after this move when we get our pullback. One area of concern you have to be aware of is up at this third wave area. If we get this, all we have is a complex correction unless we get this 4-5. And similar to Matic, where I suggest that scenario, as soon as we break this wave 1 high, if this is a corrective move and we reject from here, you see it selling off quickly, I would suggest bailing out. Your decision, just what I would do, and I'd look for a 1-to-1 target of this move here to the downside. Because as soon as we break that wave 1 high, if this is a 3-wave structure, we can get a 1-to-1 extension, and this is all just a B wave. We're moving correctively to the upside. And that would take us right back down to previous lows. Again, a bullish correction, still looking for upside after. It's just we wouldn't get it from right now. We'd have to wait for that, and it would get dragged out in time, out into springtime. So that's areas you have to pay attention to. So just want to see this continue to move correctively, make higher highs, higher lows. And if we get this completed structure, I'd be quite bullish on it. So we'll see what we get here. But I will make sure to update this as necessary. I'll put some stops at areas of importance. At the previous high as well, but very difficult to see this as anything other than a diagonal. There's no way this is impulsive in my mind. So waiting for one of those two scenarios to happen. Either we come up for this and make a 3-wave, and then we collapse pretty quickly, in which case we'd look for that 1-to-1 long at the bottom of that wave, or we continue to make zigzags to the upside, in which case I would be interested right over here for a long, and that'll be a nice trade setup eventually. Where are our targets in the future? Yeah, if that pivot holds, if this low holds and we end up making that diagonal, we're looking at pretty far upside targets eventually. On log scale, that's up, $360. So very nice upside potential once we get that wave filled out for 5%, 400 or 500% from here. depending on the pullbacks we get. All right, guys, I hope that was helpful. Just looking for this to move correctively. Don't invalidate any support levels. Stay within our pitchfork and move up to that $90 mark. All right, guys, that's it for this one. Thanks for watching. I'll see you on the next one.